What's up, YouTube? Oh, wait up. Yeah, no, it's recording 5 seconds. So what's up, YouTube? This is Martin Day Trades on YouTube. So on Instagram, I'm Martin.daytrades. So follow me on both social media platforms, guys, and tap in, send me a DM, let me know you're seeing my content on YouTube, and I could answer any of your questions. Like, comment, subscribe on YouTube. I'm going to be posting a lot more of the tools I use on TradingView, tips and tutorials, or tutorials and tips for TradingView here, guys. We got TradingView, and I want to show you guys how I use the Fibonacci Retracement Tool to find an area of high interest to enter a trade. So create a high probability trade idea. So right here, guys, I'm going to go to the weekly and kind of just want to draw something out for you guys. So if we go like this, you can see that there's impulses and then retracements, historical. So from here to here is an impulse. We could draw it from the low to the high and see how far it retraces to. If we do this impulse, we can see that price fell down after about, let's see, 1, 2, 3, 4, 5 weeks. After about a month and a half of a down range, it went into the 79% fib level right here. Took out these lows right there, and it rejected the 79%. Now, guys, I want to do another one. We could do it from this low from right here to this high. I'm going to use an ellipse so you know where I'm drawing the Fibonacci retracement tools. And you can see that there was it broke below the 50%. It's now within this order block. So depending on how it opens, it may need to come up into this area right here, into this area for a move lower to the 62%. I'm thinking that seems pretty legitimate for a day or within a certain like a week. But you go down to the 4 and you can see that this is how that move may play out. And remember, this is a long time, guys. Like, there's moves within the day. So we have to be able to know that, okay, well, price can move up now at this point, but where to? And then I drew it up into this range, and there's going to be many days before it gets up into this area, but that's already almost 1,200 points right there. So, yeah, let's see if we can't see how much this could retrace from this high to this low. I want to say that this is going to be what the Fibonacci is going to go off of, from right here to right here. So there might be a pullback up in this area before the move lower to this area. So I'm still long-term bearish, but short-term bullish now for the next couple of days or this week or 2 weeks. Had some pips before the move down, and it may go lower, guys. Remember, this is the really good areas of interest are between the 70 and 79% fib levels. Now we could go even lower on that to the 15-minute chart, guys, and we can see different levels of retracement. So we had this move up here. Go to the 30-minute. This move right here, and you can see that when price came down, this is the impulse, guys. I'm measuring it from here, and then what I'm measuring is a Fibonacci retracement tool. The Fibonacci retracement tool gives levels to where price could retrace to. And you can see here that price went and targeted the 38% before it's moved lower. So there's different ways to use these. We can use it on intraday basis too, guys, like this area right here, like the from here to there, if you use the Fib tool to see where price can go. And it looks like it's already rejecting the 38%, but there's about the same equal highs here, so I feel like it's gonna have to come up, take out these equal highs. And there's a fair value gap right here, guys. I'll be going over what fair value gaps are. They're also known as imbalances in the market, and how we use as traders fair value gaps and imbalances for targets, sometimes entries. But I'm gonna write down here, guys, in the text box, what is a Fibonacci retracement tool, and so the Fibonacci retracement tool measures the impulse of a move and then gives retrace pullback levels, also known as retracement levels, for good optimal trade entries, for good risk to reward setups. So guys, I'm gonna just kind of pull that back in. Try to bring this down a little bit, guys. There we go. So I'm gonna leave that up. Might make it a little bit bigger, actually. 28. Okay, if you guys can read that, it says Fibonacci retracement tool measures the impulse of a move and then gives the pullback levels, aka retracement levels. Okay, so like I said, guys, there was this impulse here, and I'll measure it. And this is using a Fibonacci to measure intraday stuff, the 1 hour charts. And you can see where price could come back into this impulse. So if you want to get a discount, this is the whole move. Well, I want a 79% discount. Wait for the price to come up into this area, because we can also see here that I have a video. My last video was talking about what's it called, order blocks. So we can see that there's this last order block before the move down. And I can actually make this a little bit better, like right here. Now they say the whole move, but we guess we could do that right there. So the 79% lines up almost at the 500. 500's down here, but it also goes up to about, well, there's this, I don't know, like I would wait for price may come and take these highs out and go to the 800 level before the move lower, because of just the big figure levels right here. And I'm just going to measure that right here with the line. So price may come up, take liquidity for the move lower, and when it does that, we can measure, targets like, okay, well, there's this impulse. So we're going to wait for the retracement, see how far it could retrace, and it may go down, who knows, to 200, which would be about right here. And there's an order block down there, so that's a good area of interest. When the market opens, it'll create an order block. It's the last down candle before the move up, so then we can measure, somewhere along these lines. And if we're getting in short up here, 50-point stop, for a 2 to 200, That's a 1 to 11. I highly doubt that's going to be the setup, guys. It's already creating a equal highs around this area. So it may come up, may not even get up to these levels right here, guys. It may come up into this order block, which if it does, I'm gonna have an eye on it. 50 point. Like right there. For this move, which turns out to be a, we'll target this right here. Even 500 is right here, which would make it a 1 to 3 risk to reward. You know, for getting in here, wait for the pullback. But you know, who knows, guys? I'll be waiting for Andre. Maybe do a 100 pip stop loss for a 1 to 3 risk to reward. May come up, come down during market open of New York. Who knows? But this is how you use Fibonacci retracement tools, guys. And I want to kind of just go over one more, you know, how to use it after as the trade's playing out. So when the trade is playing out, you know, this move happens, it's gonna create a impulse from here to let's just say here. About 700, 650, 800 is right here. No, I think 800 would be a good spot. This is still a 1 to 3 risk to reward. But let's say let's say that this is entry. And now we have know where our 100-point stop loss is. It's up here. It's almost essentially up here. I'd say 850 is a pretty legitimate stop loss. It's right above this order block. 50%. 800. 100-point stop loss. That's right at the 50%. I don't know. It would need to be pretty close to here. I'm gonna say actually my entry is gonna be around 950, maybe 12,000 would be a good spot to the 50-point stop to come back and then test this breakout area, which is turns out to be like a 1 to 6. Or even to the 800 intraday stuff. But let's say a price comes up and it gets to 800, 100-point stop, and then we have targets here. Well, where can targets? Well, you're probably like, well, where do you see these targets? So I did this tool, Fibonacci, because then we'll see how London trades to see this impulse that it creates. Let's say it comes up, the Fibonacci, and it comes up to here. This price goes up to this area, 800 level. Well, when price does that, we can look to enter here and see where price can target. You know, we see where Asian sessions are, what happens, but there's this target, and I can target all the way back down here for a 1 to 5, essentially. Risk to reward 525 points, but I'm only risking half a percentage for each move. So this could technically turn out to be a 5% day, unless I'm risking a full 1% for 50 points. And if it moves 500 points, that's 10% in one day, guys. Jeez, that would be nice. But anyways, this is how you use Fibonacci retracement tools. Follow me for more live day trades throughout the week, and as I keep posting, you guys will see how I refine these this Fibonacci tool, and how I use it with other TradingView tools to create high confluence areas to enter for optimal trade entries, kill zones, and hopefully you guys can start practicing using these Fibonacci tools so that you can see where with back testing, so you can build confidence to see, well, price isn't where it's supposed to be. How do I know it's going to go there? Well, human nature shows that we repeat cycles. So if with back testing, it'll build confidence knowing that, hey, just because price isn't there now doesn't mean there's going to be a push to grab liquidity before an impulse. So practice back testing, guys. I'll have back testing videos I'll upload later on. Right now, I'm just kind of just making videos, making content. I'll back test with showing how I back test eventually on another series in my channels playlist on YouTube. Go ahead and look into those once those are up and live. And just want to say thank you guys for following me. Like, comment, subscribe. This is TradingView tips and tutorials, Fibonacci retracement, and how I use fibs to make money online. This is Martin Day Trades, and have a wonderful day.